Hello everyone. So if you've watched my previous video, you know by now that we expect price to take out these lows and expand to these all-time highs. Essentially, because we've had a new phase of price, we can expect that from an expansion to retracement to an expansion. But we've covered all that already in the previous video. So hopping down to the 4-hour chart to build our narrative, we use the 4-hour charts because it's very reliable. Credits to Garrett Trades for putting me on that one. I learned a lot from his channel, so you could probably check that out too. So essentially, we use the 4-hour chart because it provides very valid points of interest. Like you can see this PDRA here, this fair value gap that price reached into and closed out of, which very shows a lot that it's respecting that PDRA. And you can also see that using the 4-hour charts, we can break down each of the day into sessions, and that helps us with our daily profiling. So we're profiling based on how each of the sessions move. Essentially, we can say that Asia, London, and New York play a very important role in the formation of the daily candle. So usually we would have Asia consolidating, London manipulating, and New York continuing, which is expanding to whatever target or draw on liquidity we have. But yeah, that's basically it. So each of the 4-hour candles, the 18 o'clock, 22, 2, and 6:10, they all represent Asia, London, and New York respectively. So essentially, we're going to just play price forward, and you're going to see that we should get a low. We do get at that low, we sweep out the previous low, and we close back within that candle. It would have been fantastic if we had gotten a sweep of this previous daily low, but unfortunately we do not get it. But my eyes start to look at this swing low formed, this one and this one, and you can see this triple swing formation that forms has us looking at it in the sense that we can see that this is a intermediate term low. So when you have a swing low, another swing low, and another swing low in this pattern, this way, you can call it an intermediate term low. So this is a short-term low. As you can see, it got swept. Another short-term low, but another short-term low. So when two of the short-term lows are higher beside it, you can have an intermediate term low. Usually this holds for a longer period of time, but not up to the time that a long-term low does hold. Moving on, we play price forward again, so we can see London actually does not do anything, and that's because there's going to be a major news event that occurs around 8. So basically what price is doing is just building orders on both sides to prepare for the massive inflow of cash during that time. So there are a lot of orders that need to be filled, and so what the market does is essentially just builds liquidity on both sides by consolidating. So essentially what we want to do out of the consolidation is we want to find where it's going to manipulate, and when it manipulates, we want to find how it's going to expand away and into our targets. So essentially, following the daily profiling, we've seen Asia put in a low, we've seen London consolidating, we're still within this candles range. So essentially, this is all consolidation. If I were to go down to a lower time frame, it would be very obvious, but for the purpose of this video, this is all consolidation. So essentially what we can expect New York to do is to sweep out this low or this low and attack these targets.